right, so thanks to those that have come on board already. I think there's still a few more coming through now, but this is Unleash first in a series of advisor webinars. So today we're going to be talking through the top 3 e-commerce accounting mistakes. And on the call with me today is Jamie Shulman, who is head of accounting at A2X. Hi, Jamie. So you may also know Jamie from Hubdoc. He's the co-founder there. So another app that I'm sure a lot of you in the audience are using. And very important guest, Philip, as well, from Outserve. So Outserve is an implementation partner to Unleash, but they're also one of Xero's 3 app integrators in the UK, and to boot, he's also an accountant. So there's some great people on the call today to talk us through our 3 topics. So if I just click through, so everyone knows what we're going to be talking about. So we've got 3 topics we're going to be covering. 1 is getting payouts wrong. 2 is invoices and sales ledger mishandling, and 3, inventory, cost of goods sold, and cutoffs. So big focus on e-commerce accounting. So I'll kick off with you, Phil. With regards to getting payouts wrong, what do you mean by that, and what do you often see?
So yeah, to get straight into it, I suppose what we're talking about here is, if we take the example of the two main platforms that we see a lot, 2 very popular ones, Amazon, that everyone will know, and Shopify. When you're running your own e-commerce store, obviously they pay out in bulk, say every 3 days, could be up to 3 to 5 days for Amazon, say. So you'll just get one big payout coming into your bank account. So you can imagine that probably from maybe Xero or QuickBooks, there'll just be one big number hitting the bank reconciliation, wanting to be posted. So just for argument's sake, Shopify pays out £3,000, hits the Xero bank feed or QuickBooks bank feed, and then we've seen businesses in the past literally code that up to a sales code, give it a VAT status, and off it goes straight to the ledger. And unfortunately, there's a bit more complication to that, because what Amazon or Shopify has done there is actually paid out a net payment, and it could have taken off and adjusted for many different things, but certainly for selling fees, which you'll be charging regularly, there'll be other complications and nuances in there. So to treat that figure as all income could most of the time be incorrect. Obviously, you've got an issue there with reporting and your accounting of your income, but of course then the taxes, particularly in the UK, the VAT element of that income would be very likely be wrong. And similar with many other payment gateways as well, but those 2, because they're very popular and they pay out in bulk every so many days, we see this issue a lot.
Right, I see. So just before we carry on, I just want to say for all the attendees out there, if you are au fait with Zoom, there is a Q&A button at the bottom of the screen. As we're walking through this discussion, please feel free to pop your questions in. We'll get them answered at the end, if not throughout. But yeah, good point on the payouts then. So there's quite a lot of different transactions and fees and things that go into a payout then.
Yeah, and probably quite a very significant long list going down, and probably things you don't always think about. A great example maybe is gift cards. So when you might be selling products online, but many Shopify stores will sell gift cards, and that can need a different treatment than selling a product. And again, you get the nuances below that as well. There's a different sort of gift cards. Was it a single purpose gift card? Was it a multiple purpose gift card? They need to be can have a different VAT treatment depending again on what you're selling, who you're selling it to, and all of this breakdown. Obviously, Amazon and Shopify, but particularly Amazon, would like to put in their shipping fees, shipping income. If there's any marketing spend that you might have some marketing spend with Amazon, so you're paying for ads. All of this is just getting netted off. So suddenly we've got income, maybe shipping income, shipping fees. We might have that the marketing spend, which should have been gone to the profit and loss. I'm sure many of us would want the gift cards to go to a gift card control account, because obviously that's not income now, depending again what sort of gift card it is. It's something we've got to handle later on, and all of the time, all of these different transactions could have a different VAT status and need coding separately. So if you think about going or just those items alone, this is all before we get into selling internationally, and exporting through Shopify or different Amazon stores across the world. Just taking that one big payout that has come from Amazon Shopify and putting it to an income code really does start to feel quite wrong. And clearly we could be having, like I say, not just income being incorrectly coded, but transactions for the VAT return, or start thinking about people who may be trading with Europe and now need to do things with iOS or any of the different levels of reporting that we've got to do there. So lots and lots to think about, and it soon gets very complicated, and there is multi-layers and multi-levels of those transactions. I don't think anybody who's had anything to do with Amazon will be surprised that Amazon can very quickly make it very, very complicated, do a great breakdown, and they're doing a much better job now, whereby they're having to actually handle quite a lot of the VAT themselves in Europe. So that's really good as well. But actually being able to see that breakdown and all the information is absolutely key. And I think for many, this is a great opportunity. I think I'm sure Jamie can talk to this, a great opportunity for the accountants, for the advisors, to really be working with their clients to understand, because absolutely understandably, there's a lot of the clients they have, I'm sure, don't understand the difference between different sorts of gift vouchers, different sorts of how they should do their VAT, import, exports, all the different reverse charge VAT, all the things they need to think about on these Amazon and Shopify type transactions. I think they do need guidance and advice.
Yeah, I was going to, that was a great explanation, Phil. And I was going to add in that I'm a bit newer to e-commerce. I spent, Bethany, as you mentioned, a number of years at Hubdoc, where we focus on all small businesses. And now with e-commerce taking off the way it is, a lot of accountants and bookkeepers are finding many of their clients, existing retail clients, are adding an e-commerce component, or maybe the clients are e-commerce merchants, exclusively. And I know as I came to it, I intuitively thought, or at least it seemed the right approach would be, well, I'd want all my sales, if I were just a merchant, just like a retail store, I'd want them all in my GL, like Xero, say, or QuickBooks Online. And just the concept of focusing on the payouts versus the actual sales, I found an interesting one that merchants, the actual clients themselves, don't necessarily think about. They would think, oh well, gosh, I'd like my sales to my customers right into my GL. But in e-commerce, at a high level, first of all, the transactions are often, unlike brick and mortar stores, the transactions occur through a platform like a Shopify or an Amazon and others, as opposed to the bricks and mortars, kind of just with your bank. The customer pays you, it goes to the bank. But when you're an e-commerce merchant, you're relying on getting the dollars, the money from the platform. And so just like Phil said, the merchants realize if they have a sum of money, whether it's, say it's £10,000 come into their bank account, that payout, one might think is just their sales. And it's not their sales. The sales might have been £20,000. But in fact, as Phil said, there's all these layers of items that will have been taken off, for example, by Amazon. And it could be refunds, it could be returns, it could be tax, it could be fulfillment fees, it could be advertising, it could be loans. And I've learned recently that there are up to 400, at A2X, we focus on this, there are up to 400 categories of charges or items that could be coming off of your sales to get that net payout. It isn't always that many, but just at a high level, it's that concept of focusing on the payout and the money as opposed to the sales transaction, which one would maybe traditionally do with a traditional business. That's a key difference. And the other thing I'd say is many e-commerce businesses grow quite quickly in terms of the sales and the revenue. And if you're selling a relatively low valued item, you can imagine there being thousands, if not tens of thousands, or even hundreds of thousands of orders a month. So but even thousands of orders a month, that would break, Xero or QuickBooks Online, the GL, if you tried to put every single order in there. And so I just feel like it's something that's not particularly complicated, but it's maybe counterintuitive. And so there's a real opportunity for accountants and bookkeepers to give this advice to the merchant, who, whether they're selling jewelry or they're selling mugs or t-shirts, whatever it is they're selling online, they probably love focusing on their business and less on getting the accounting right, let alone the inventory right. And so I just would highlight that, just high level point, that there's real opportunity to advise the merchants, because it's a little bit, it's very different than what one would expect from a traditional business.
Exactly. Right. So for those that aren't aware of A2X, they are an e-commerce accounting platform. So they pull sales data from systems like Shopify and Amazon and post that into accounting software such as QuickBooks and Xero. So when we're talking about payouts, we are talking about lots of transactions that have happened over a period that are then posted into your accounting system. Is that the easiest way to say that?
I think that was great.
Okay.
It's about reconciling your revenue for your client's revenue, but doing it in an automated way with much less manual work.
And do you guys usually see, is it the accountants that do the reconciliation, or is it the clients? Just trying to understand where that, when we're talking about top 3 problems, where that kind of problem comes from and how we can, the best way to alleviate that.
Well, I could start quickly, and then Phil's a lot more experience than I do. But I would say that as a starting point, there are many ways that a client could go in the wrong direction with this. One being, as I mentioned, they could focus on their sales and getting every single sale into their general ledger. And then there are a multitude of others, as Phil said. When it gets a little bit of complexity, even if a client adds a second sales channel, maybe they're on Amazon and they add Shopify, or maybe if they add a second payment gateway, which is how their customers pay. So maybe they add PayPal on top of Amazon Pay, or add additional currency. They have some clients maybe that are in Canada as well as the UK. It starts to get complicated. I think as soon as there's a little bit of complexity like that, or to a certain level of size, the most businesses I've interacted with would like to have an accountant or a bookkeeper handle it for them to make sure they get it right. I don't know, Phil, if you find that.
Yeah, I think, as you mentioned, some of these businesses have started quite small and scaled very quickly. There's a great opportunity within e-commerce, especially in the last couple of years, of some of the things that we've seen. So I think they probably started off doing their own accounting and probably struggling a little bit. And great time, I think they're sort of reaching out, looking for accountants who can help them. And I think it goes to that sort of accountant again, who've sort of adopted sort of Hubdoc and those sort of platforms to help them support their clients, do automated bookkeeping, obviously building up to do management accounts and everything else. I think these businesses are getting ready to go to that stage, but really need that advice and help on taxes and everything else.
Yeah, great. So yeah, I think that kind of covers topic number 1 then. So in terms of getting payouts wrong, it's just not accounting for that payout as all income. It's accounting for fees and taxes and returns and things like that as well. Is that what we're saying?
Sounds good.
Good point. All right, so if we're moving on to point number 2, which I think you brought up, Phil, so invoices and sales ledger mishandling, and talk to us about that.
Yeah, and I think what we've seen, obviously we've mentioned Shopify and Amazon there, but we also, have seen many businesses come to us with many different e-commerce platforms, Magento, WooCommerce. I'm sure many people have heard of these platforms that they're clients, and there's a lot of existing integrations out there, or they've had someone do an integration, or they've taken an integration from an app store somewhere, a WooCommerce one or a Magento, where effectively, as soon as an order is placed on their e-commerce store, it then creates that as an invoice in Xero or QuickBooks. And that, again, when the businesses are small, that might be, they may think that's the right thing to do, and that's okay. So lots of little invoices, again, if they're just small transactions, are coming into the sales ledger, creating lots of customer accounts, and then they're probably picking up their PayPal feed or one of their, or even a Stripe feed, and matching them all up on this little sales ledger they've got in Xero or QuickBooks. But of course, as soon as we start getting scale and they start getting successful, we've seen people come to us and suddenly we look in Xero and they've got 20,000 customer accounts and thousands of unreconciled ledger balances, which, to be fair, nearly all the time they're not real. Most e-commerce sales direct to consumers in the UK on these sort of platforms are paid at the point of order, so they weren't ever a sales ledger item waiting to be paid off. And suddenly a lot of these e-commerce businesses have created a real headache by having to match bank feeds or PayPal feeds off with lots of little invoices. And I think what they probably don't realize also is that really a lot of these accounting systems were not designed to have 20,000-30,000 contact records in, first name, last name, addresses, and all of these invoices. So we have seen with the more successful ones that they really have put too many transactions in. But actually, from a bookkeeping point of view, it's just a headache that no one will ever get to the bottom of. And of course, not the correct way of doing the accounting either. They've now focused on the other side of just getting all the sales and invoices in, but they're probably now missing the shipping fees or the charges and everything else. So it's partially the extreme opposite of just doing the payouts. We're now trying to account for every single little invoice. It's a bit like being a sort of a cafe on the high street and trying to put, every time you sell a cup of coffee, you put that transaction into your Xero. You don't want that. You want a proper summary of the takings. And absolutely, we deal with business to business e-commerce where they do want ledger items. We can talk to where people are paying buy now, pay later. We've got all these lovely things like Klarna these days, but a lot of the time we just don't need or want that level of volume and all those micro transactions in your accounting software.
Right. So what would you say is the best way around that? Is it switching to payouts, but making sure that we're taking into account everything we discussed in point 1, or is there another method?
There's a few things. I think it depends on the circumstance of the business. Obviously, you definitely would want those orders. You've got them in your e-commerce platform. You might need to send it to your inventory management, which, as you know, we often wouldn't use the accounting solution to be the inventory management in the scaling business. But definitely, stop the invoices coming in and look at a payout solution like A2X that can do that analysis. So we want to get the income in correctly, as we like saying in point 1 about getting it broken down to get proper income. But we definitely don't want the invoices, and we need to think where do the orders or the invoices go? Does it need to go into stock and inventory management? Clearly, those orders need to be pick, pack, wrap, dispatched, or sent to the third-party logistics partner or whatever they've got to do. But definitely, I think at a sensible volume, we don't need those individual invoice transactions. You're not sending an invoice out. You're not expected to send a statement out to many of these e-commerce customers, and they've already paid. They paid at the point while they were on the website. Yeah.
Okay, that makes sense. Have you seen that? Yeah, I was going to ask Jamie if you'd seen that in your time at A2X a short time. Has that been something that you've heard of?
Yeah, absolutely. And I just thought of back to your original question. I thought of another example of an occurrence that can cause issues, and it's quite frequent, which is when these payouts occur, come in from the sales channel, whether it's Shopify or Amazon. They often span, it could be a couple of weeks. And so if you're in the first week of a month, often the payouts will say they came on February 8th. It might include the last week of January and the first week of February. And so I would call that, I guess, a timing issue where the payout came in on the 8th of February. And although it would be tempting just to put that as February, sales, and put it right in and match and have the sales go into your general ledger. But in fact, there's half of those sales that came from the previous month, or even if it were in the beginning of January, half of it could have been from December, so an entirely different year. So in a world where businesses big enough that you're doing a proper accrual accounting, and you're wanting to know how you're doing as a business, not to mention you want to file a correct tax return, you'd want to properly put the sales in the right in the right period. And so it's just another example that happens quite frequently. This I feel like it starts to, at least to me, sound complicating, but it's actually not that complicated for an advisor, for an accountant or bookkeeper, but it can be quite complicated for an entrepreneur or business owner who's trying to run their business and has 100 things to do. So that again, that's why it's an opportunity to really give advice, just so they don't go down the wrong path of either putting in all these individual sales into their general ledger and or putting the sales into the wrong time period.
It's a good tip. Can you kind of split payouts and kind of allocate them to different periods in something like Xero? Do you know? Or
well, with A2X, it's actually one of the areas that were quite helpful because it's done in an automated way. And so when we grab the data from your sales channel, like a Shopify or Amazon, and we pull it in, and we actually recognize which period it's been in, and we kind of bundle them together into the proper period and split them, and automatically send them over to, when the accountant or bookkeeper is ready, send it over to, say, Xero or QuickBooks. So we actually pull it out and split it out and itemize it for you automatically. That would be one of the benefits of not having to do that manually in a spreadsheet.
Mm-hmm. Awesome. So definitely pays to have these systems integrated that are going to make life a lot easier.
That's what we're seeing, yes.
Yeah, good. Yeah. So Phil, so with this webinar, we did promise that we'd be talking about how to avoid problems in terms of how to resolve them. If this mistake's already been made, we've got lots and lots of customers. And let's talk Xero, for example.
Yeah.
In your experience of dealing with this problem before, is there kind of a quick fire way to get back to the ideal and clearing all of this data and getting everything set up correctly?
Yeah, and I'm sure obviously probably a bit before that, an opportunity for the accountants and advisors who are working closely with their clients, no doubt keeping an eye on their Xero, seeing their Xero regularly, trying to get it to see this coming before it gets too bad. In extreme cases, we've actually seen people sort of migrate off Xero and back into Xero. So effectively, because they've got 20,000-30,000 contacts and so many transactions that it's causing issues around running reports or other issues. And again, I think Xero gives guidelines around volumes, that they've actually started a new Xero with open items and set up in the way as we've described. But I think the key is obviously to clear down those sales ledger accounts if they've been sending the invoices. So we take that as an example where they have sent the invoices, to clear everything down, draw a line at a certain date, and then start coding them probably on the ways that A2X would do. So it's a tidy up position, which I'm sure, again, many clients would go to their accountant and want them to tidy their accounts up, clean out. We could archive any of those contact records that they're no longer requiring, which would save a lot of time when you're searching for contacts, because you're finding all these records that you don't need to. If it is that they've posted payouts within that current year, then obviously Xero is a great example that you can go and edit those transactions. If it's historical, to start having a look. You could actually implement something like you could implement A2X now, which would then look at the payouts historically. So if you suddenly realize you've got 6 months of postings where they've just posted the income, you could actually connect A2X, get the history, and see how it should have been, and start to look at how it should have been posted correctly. Obviously, the A2X needs the setup and the work. Again, A2X fantastic to advise on that, but historically that could be fixed. Clearly, if they're filed accounts in previous years, then the accountants will know what to do there to take a view of what the differences were and what effect that would have had on filed accounts or any file back returns, etc. If errors have gone. Hopefully they'll have been caught in these current year, the current periods, and those adjustments can be made. The accountant advisor is perfect for doing those clean up Xero, and I'm sure there's lots of many things that Xero may need to clean up on behalf of the client for things they've done, and this is just another one of those areas, understanding and looking for these issues. But obviously now, hopefully thinking that you can either look for either of these two issues and they should stick out quite significantly.
Brilliant. So as long as nothing's been filed, we're within a 6-month time period, we are safe. We can resolve this.
Well, again, open periods, the accountants will know. It obviously all depends on what was filed and when and how, how big maybe any differences were. So each case on its own merits, and I'm sure that each advisor or accountant would look at their client and take their own circumstances into consideration if they had made significant errors because of those posting mistakes.
Right, and it just goes to prove, doesn't it? I think a lot of these apps out there at the moment, clients and business owners themselves can go on, sign up for it, set it up and start using it, which is great, but it is really important for especially accounting type applications to be working with your accountant and your advisor and making sure that you get that initial setup correctly. They know your accounts. They know how to map everything correctly. So it is really important that they work with advisors like the ones that we've got on board today. Just a reminder, guys, I can see a couple of questions have been submitted, but if you've got any more, please pop them in now because we will get to them towards the end. So should we move on to point 3? So inventory, cost of goods sold and cut-offs, which I know we've kind of covered already with cut-offs. But Phil, do you want to get started?
Yeah, and I think from our point of view, where we're working with some of the clients that we see, where we really want to get to sort of the end game of some of the reporting here is being able to run sensible management accounts and even start to slice and dice the data here. So a client might want to say, right, I want to see profit and loss for January from the Amazon channel. Mm-hmm. It could be across markets as well, but let's just take the Amazon channel where I can see all the income from Amazon against what my costs were, including any other expenditure as well. So the perfect scenario is you see a profit and loss which has Amazon income, which is could have come from A2X, but then we've actually got the cost of those goods sold particularly matched to those sales, and then maybe any direct expenses as well, because a perfect example would be if you're on the Amazon platform, you might be paying for Amazon marketing, and then you might have all your Amazon fees. You might even have a certain third-party warehouse or somebody involved. So you really want to start to have a look at that information to understand what your margins are on those Amazon sales, because obviously Amazon takes quite a chunk in fees. It's very keen on price as well, and then you've got all those overheads. You might, on the flip side of that, want to start looking at your Shopify, your own e-commerce income, for which you might be paying for Google ads, and again with tracking codes, nominal codes, and all of the integrations here, you can actually start to get very meaningful management accounts very quickly after a month end to start planning, making strategic decisions, forecasting. But a lot of this is about inventory control, and it's about getting the cost of goods sold in. So understanding as the Amazon sales and the Shopify sales are coming in, actually what is the cost of those sales. And traditionally, probably what many clients have done is probably just posted their purchases into the P&L, and there's not that, we've had to cut off again, and there's not that direct being able to attribute the costs of those sales to the income, along with the groupings, the tracking codes, the different channels, the different markets, to be able to have that analysis. And I think this is, again, perfect area where accountants and advisors can really help start creating those management accounts that will actually give them the information to make good strategic decisions, especially at the moment where we have seen some businesses really benefit from an increase in e-commerce in the last couple of years. But now what we're seeing, of course, is rising costs for everybody. Mm-hmm. So seeing the margins, very clearly across different marketplaces, across different e-commerce stores, across different countries, especially taking into account shipping charges, warehousing costs, delivery costs, which we've seen significant increases in the last couple of years, so important that they can actually get to that detail. And I think most product-based businesses, they've got fantastic products, but this isn't often their area of expertise to get to that level of good accounting data.
Yeah, you're right. So with that, exactly as you say, the rising costs that we've got, it's important not just to see the sale amount. As you say, you want to see kind of the landing cost. You want to see what the product cost you to make, what the product cost you to ship, what your fees were on that sale, etc., so that you can really see what your margins are and work out what profit you are making on the products if they are costing you too much. So that's a really good point.
Bethany, I was going to, if I can jump in, I was just thinking, hearing that Phil explains this very, very well and quite clearly, but I was going to add that, I imagine for some accountants and bookkeepers, it can sound like a lot to do this, because we've talked about general ledger software like a Xero, and maybe there's revenue reconciliation with A2X, and Unleash is a great inventory management product. But the reality is it's actually, in a world, I think what I've found over the last number of years is that the technology, like the ones we just mentioned, is inevitable. That more automation is going to be continuing to emerge that'll help accountants and bookkeepers do this work more seamlessly, more accurately, and provide a better experience for clients. With that inevitability, I've found that the human component becomes even more and more important for the business owners to have comfort and security that they're doing their books correctly. They know how they're doing as a business, and they can file the correct tax returns. And so whether it's, Phil's exceptional at this, and the accountants and bookkeepers perhaps on this webinar, it's not that much work to get expertise in this and understand how to both set up the right processes, having repeatable processes at the firm, no matter how small or how large, and then the right technology, for example, Unleashed or A2X and others, and then being there as a human being to help the clients with it. It just seems like there's this giant opportunity in front of us, because the automation, I think for me, I find it highlights the importance of being a human advisor to the businesses, as opposed to in the older days where maybe it was just pen and paper or a spreadsheet and it could be done maybe on their own, they would think. This isn't something that business owners are typically going to try and tackle, because it gets complicated quickly for them, while the accountants and bookkeepers, if they focus on it, can actually be experts.
Yeah, and the technology is definitely what helps enable those advisory services, for sure. What from A2X, what's your advisor base like? I know that you've got a lot of accounting partners. Is that quite a big partner base that you've got? Do you know roughly how many accounting partners you have?
Yeah, it turned out, and I had a similar experience when we started Hubdoc, which is at A2X in the same way. Had a lot of small businesses, businesses sign up for the service, and then it just turned out that more and more accountants and bookkeepers started joining and signing up, because they realized, as we were just saying, that they can deliver a better experience to their clients in a world where they're not focused on billing by the hour as much. If one's moved to more of a value-based, kind of fixed pricing, there's an opportunity to deliver a better service, and candidly to make a better margin on the services they're providing. So delivering a better experience and making more money at it is a good combination. So at A2X, it seems like the business is more and more tilting towards accountants and bookkeepers. The merchants will still sign up, but we heavily encourage our merchants, and there are tens of thousands of the merchants that sign up. We encourage them to match up with an accountant or bookkeeper. We have a directory and we call it a Match Me program, where if a merchant business is interested, which they often are more and more, they can put in the type of business they are, maybe where they're located. Now there's some other factors, and we'll help match them with an accountant or bookkeeper that would be appropriate for them. Because in the space of e-commerce, as we're highlighting, it can be particularly complicated for the merchants who aren't focused on it for a living. And so more and more accountants and bookkeepers are our focus, because of the value they add for the merchants.
I love that. That's a good program. Awesome. Guys, if you can pop a few more questions through now, whilst I share a bit more information. So I'm just going to share my screen again. Now, you may or may not be aware of this, but A2X also have a really great Facebook group called the eCommerce Back Office. So I think there's about 1,500 members in that group, and they share lots of information. There's lots of discussions, links to webinars, live webinars like ours and from other businesses, podcasts, etc. All talking to the same subjects we're talking around today, e-commerce accounting. So I just wanted to share that with you. And we'll be popping in the chat now as well a link to the page on A2X's website. They've got some downloadable content with regards to tips and tricks on e-commerce accounting as well. So let me get that into the chat. Phil, I think you wanted to share your LinkedIn profile as well on the chat. Is that right?
If that's okay, I'll drop that in there. I think as we said before, we obviously had some discussion around what would be the top 3, and I was just making some notes and coming up with the discussions of the top 3. I think I came up with 20, the top 20 things. But again, I'm happy to share my notes, or if anybody wants further information, and again, if they want to connect to me on LinkedIn. Very happy to continue the discussion or share any information.
Good point. So let me just quickly put, I did create a poll. I'm just going to launch that now. It's a multiple choice. So if you want to hear from Phil about those top 20, you can tick a box here and we'll share your details with him as well. If you want to hear a bit more about A2X and perhaps their partnership options, please hit that. Or if you want to have a chat with Unleashed, so myself or Will with regards to inventory management for e-commerce businesses, then feel free to tick there as well. Just going to give that a few more seconds. And then we'll just cover off the questions that have come through.
You want me to ask some questions, Bethany, while we wait for that?
Yes, please. Thank you.
Cool. So we've had a few in. The first one from Fatima. Hi, Fatima. She starts actually with a compliment of A2X, so that's always good. I was worried that it wasn't going to start with that, so that's positive. She says A2X is fantastic at allowing the payouts to be reconciled correctly, particularly where the VAT breakdown and costs should be considered. She goes on to say, as A2X will only pull through the sales or cost information on a payout basis. How does it work where a business has refunded perhaps more than they have sold, or where for any reason a payout has not been made? They have still made sales in the period, but as there is no payout, no information pushes through to zero.
Got it. I think I understood that. Thanks, Will. The first thing I would say was, if it's okay with Bethany and Will, is anyone who does have a question that goes beyond what I answer, you could either reach out to me at jamie.s@a2xaccounting.com or contact, which will go right to a team of our customer success people. The answer I think I would say is that A2X is going to we'll pull in all of the line item detail as we discussed earlier. So right from the gross number right all the way down, net of all the fees and refunds and returns. I think the example was refunds. And so we'll pull in all the detail, which would provide the best opportunity to get the most accurate accounting in Xero at the end of the day. And so that if refunds were greater than sales or vice versa, it'll all come through in the detail. Although if one hadn't used something like an A2X that's pulling in all the detail, one would, I guess, just have a no number or no payout or a negative number. We'll actually provide all the detail for you that'll end up in Xero. And I think you'll be able to see if, for example, I think the case here was if refunds were greater than sales. But again, please follow up if we can give more detail. But I think that would be the best way to describe it, is you'll get all the detail to see even if refunds were greater.
Cool. Cheers, Jamie. Another question on A2X. Is there any way to capture sales and all other transactions from the App Store and Google Play? Can I do it with A2X?
our focus right now are on the larger sales channels that we've got listed on our site, which is Amazon and Shopify and Etsy and eBay and Walmart. They're all listed there quite clearly. I'm trying to think. You could pull it in manually, but the short answer would be we're not integrated directly with them right now, so it wouldn't be quite the same experience as from the larger sales channels. Though we're always taking suggestions, and we are continuing to build new integrations.
Cool. And how does A2X work for subscription-based businesses that use Recharge or Bold? I don't know whether that's one for you, Jamie, or whether you've had any experience with that, Phil.
Shall I take that one? So
Sure.
Recharge is often used on Shopify as an app that will, like I say, take that subscription. But each subscription is so we say it's a monthly subscription. We'll create an order, and then all of those orders will be paid out in the same way. So it's just a repeating order essentially. That the order is taken, the payment is taken, and then A2X will pay out. A2X does do a great thing with some of the apps. It actually breaks down which orders came from which apps or how the money comes out. But essentially, from a payout and income point of view, it's the same for accounting. And again, you could add additional lines if you want to start saying, well, I want to know what is my subscription income compared to non-subscription income. But it will actually see the main income as the same. Bold, I'm thinking of the same one. The company that do Bold do quite a few apps. The main Bold app actually is a separate integration, which my understanding of the Bold app is that it does send every single invoice some of the time in its setup. So I don't think you'd have Bold and A2X. It would probably be Bold or A2X. So Bold is so I'm saying Recharge, definitely a subscription app that will work nicely with A2X. Bold, I believe that is a different integration, which you wouldn't have the two together, is how I'd understand it.
Right. Thanks, Phil. Phil knows his stuff very, very well.
No, that's great. Thanks, Phil. Brilliant. Okay, that's like all the questions. Let me just double check. I think one's just come through. Yeah, there's another one's just come through. So are there plans for A2X to start supporting with deferred revenue, or is A2X to remain a cash-only reconciliation tool?
Interesting. That may be one that I'd have to come back to you on, unless Phil has an answer that jumps into his head. But I want to make sure I get the answer right for you. Because we've really scaled the team recently. We're working on a whole number of areas, and I just want to make sure that I don't give an answer that's misleading. Mm-hmm. So I don't know whether that person, Bethany, if we could just again provide them whether with my contact information or a more general contact number. I can get you that answer. Yeah,
of course. I'll put Fatima in touch with you. I know that there's a lot on the roadmap, so it's always good to double check. But yeah, that's great. That's all the questions. So thanks everyone for coming along. I think this has been a really good discussion, and I think that we've got some good takeaways from this and a lot of learnings, and for me as well. But brilliant. So those of you, just double check that you've clicked on the link in the chat that's going to take you to the A2X website. And then there's also the link through to Phil's LinkedIn. And if you ticked any company's name on the poll, we'll be in touch with you shortly. Thank you very much. I'm going to close it up now. Have a good day, everyone.
Thank you. Thank you, everyone.
All right. Thanks for joining, guys.
Bye-bye.
Bye.